Hello, lovely people out there. How are you all doing? I'm Kate Hill, and welcome to another Adviseable property news update. We do give you the best, honest, balanced commentary and content on our channel. So before we do anything else, please click on that subscribe button. Hit the notification bell so that you're getting all our expert hints and tips around buying, owning and investing in property as soon as we post them. As important, if you are enjoying our free content, please click on that like button too. I so appreciate your support. For those of you that know me, you can skip this intro right here to get straight to those juicy bits. For those of you who are new to the channel, welcome. I am so happy you found us, and please keep watching. To explain really quickly what qualifies me to be standing here talking to you about property, buying, owning and investing. Who the heck are you, Kate? Well, me and my team are professionals in property. We have been in real estate for a really long time, advising and helping people. We have seen most things happen. We've gone through cycles, and we ourselves, most importantly, own and invest in property. We are out there doing it. We are a rare breed because we are also qualified property investment advisors. We don't get paid by anyone to sell property, and we do genuinely care about empowering you to get the best outcomes for yourselves. And we are experts at what we do. We attend auctions, we appraise, analyze, we are buying property, and we are out there 24/7 every day, 24/7, Kate, at the property coalface. So if that hasn't convinced you, I don't know what else I can tell you. So this week's news update will cover off on the latest auction clearance rates data, a national house price update, how the budget will boost housing, the NAB's monthly business survey, and what changes to responsible lending could mean for borrowers. Now, while I would much rather you watch the whole few minutes of my lovely little video, you can, of course, skip along to each particular segment that you are interested in if you don't want to watch the whole program. You can, of course, as well, watch one of my videos here to get a more in-depth discussion on the latest from the Melbourne property market. And let's get going. Let's start with those auction clearance rates, the figures that everyone loves to look at. CoreLogic report that the combined capital city preliminary auction clearance rate increased across a higher volume of auctions. There were 1,090 homes taken to auction over the week, which was up from 648 from the previous week, although significantly lower than this time last year, where it was 2,022. Of the 822 results collected so far, 71.5% were successful. Auction activity remains low across Melbourne this week, with 60 homes taken to auction. Of the 52 results collected so far, 31 were successful, while just under 1/3 of reported auctions were withdrawn. Over the previous week, 55 auctions were held across that city, while this time last year it was 974 homes that were taken to auction. Now, Sydney was to host 754 auctions this week, which was up from both last week when it was 430 and this time last year when 733 homes were taken to auction. Of the 587 auction results collected so far, 429 were successful, which was similar to last week's preliminary result. National house prices fell over September, but they actually rose everywhere except in Australia's two bigger markets of Melbourne and Sydney. The only price declines recorded were for Melbourne, which was down 0.9%, and Sydney, which was down 0.3%. The median house price for the Melbourne metropolitan area dropped 3.3% in the September quarter, but remains 6.7% higher than at the same time last year. The Melbourne result is, of course, compounded by job loss, income loss that we have seen throughout the COVID-19 pandemic, as well as the fact that the city does have more exposure to overseas migration. In the grand scheme of things, we do maintain that the Melbourne market is overall still remaining pretty resilient among the whole lockdown scenario. But there really aren't enough figures to get a general and overall view of what's happening in each particular suburb. So we will need to wait and see what happens moving forward, and when we actually do have some more solid data to support further figures. Please do watch our National Property Value Update video here for a more in-depth analysis. The general consensus out there is that the housing market will be greatly boosted by last week's federal budget, with our Treasurer, Josh Frydenberg, announcing $507 billion in tax cuts, cash payments, and wage subsidies to drive business investment and create jobs. The Treasurer unveiled a $74 billion jobs and tax stimulus plan, including tax cuts of up to $2,745 for 11 million Australians. $200 a week wage subsidies for young workers, and almost $35 billion in business tax breaks. The Treasurer says that the recovery plan will rebuild the Australian economy and secure Australia's future. Business, industry groups, and universities roundly endorsed the package. It is thought that these job creation initiatives and tax cuts will support the property market, including helping young people not only stay in their rental properties, but also move into home ownership. The additional 10,000 places in the first home loan deposit scheme will also enable more prospective home buyers achieve their ownership dreams. The September NAB monthly business survey reports that business conditions improved in September, recording an increase in the areas of trading, up 6 index points, profitability up 2 index points, and employment up 8 index points. Now, this increased confidence has built on the gains of last month and is now well above the trough in March after the pandemic hit. Conditions are now above average in WA, South Australia, and Queensland, and this points to an ongoing recovery in those states. And though New South Wales remains negative, it also improved in that month. The report says confidence rose in most industries in the month, though the gains in retail and recreational and personal services were marginal. And finance, business, and property services was unchanged in the month. Confidence is now neutral or positive in all industries except retail and the services industries, personal and recreation, and finance and business and property services. The impact of the virus remains evident in Victoria, where conditions are notably weaker than the other states. Victoria now lags the other states on both confidence and conditions, and has seen the smallest rebound in capacity utilisation. NAB Group Chief Economist says that hopefully, as the state gains control over the virus and begins to open up, conditions and confidence will rise and capacity utilisation will begin to recover there. And with state borders opening up, that the recovery can continue in other states. Commentators are saying that home loan customers may be able to borrow tens of thousands of dollars more under changes to the consumer credit laws. The changes to the responsible lending laws should see the banks revert to a more relaxed approach to living expenses when assessing a loan. There would also be less paperwork, speeding up the time it takes to have a loan approved. During the Hayne inquiry into the finance sector, the banks were rebuked for their methods in assessing a client's ability to repay a loan, relying on very simplified approaches rather than a thorough investigation. And that, of course, went completely the other direction in the past couple of years. The latest changes are designed to achieve more of a balance to protect consumers against taking on a debt they can't afford, whilst also providing credit into the economy at a critical time. The changes would put upward pressure on house prices by creating, of course, more demand because more people can borrow more money. Please don't forget to just quickly hit on that subscribe button, leave a comment below, hit the like button too. We do really, really appreciate your support, and I will see you again very soon. Bye.